As I was watching my profits dwindle by the minute, it felt like my heart sunk into my stomach. Everything went according to plan except the part about me getting stuck in the trade. I couldn't get out. Well, I'm going to help you to avoid this debacle with 3 quick tips to options trading for beginners. To stay up to date on how to take high-value stock market information and apply it so that you can make money investing and trading like the pros, be sure to subscribe and hit the bell to be notified when I post videos weekly. As an active options trader, I've learned a lot through my own journey of mastering this game. I've trained hundreds of students over the past few years, and I've seen a lot of common mistakes with beginner options traders that I want to help you to avoid. I'm going to share with you 3 quick tips so that you don't have to go through the same pain. But first, a quick story. So right at the bell opening, my long call bull play on a pharmaceutical company paid off nicely. For those that don't know what a long call bull play is, it just means that I took an options trade on a stock that I was predicting to make a strong move higher, and if I'm right, then I have a theoretical potential of an unlimited profit. In other words, it's a big money play. And in this trade, I was right. I was up over 286% profit and was ready to hit the Scrooge McDuck money vault. Like any other trader, I set my closing order to escape with the money bag. But 2 minutes went by, my order never got filled. Okay, let's try that again. Then 5 minutes went by and still no fill. Under normal circumstances, my orders get filled immediately. But this time was different. So I figured I could just trim some profits off the top by lowering my closing order until I got filled. Well, that didn't work either. So right before my eyes, the price of the stock began to drop almost as quickly as it gapped up, from 250% down to 210%, then to 180%, and none of my limit orders got filled. I got stuck in a trade for the first time in my life. Man, I was super hot. Anyway, I finally got filled the next day at about 94% profit. So what was I mad about? Well, from 286% all the way down to 94%. It took me 2 days to get out of that trade. No, I didn't lose any money, but the fact that I was right and I hit a jackpot play but didn't get the jackpot profits was very disappointing. Now, how did this happen to me, and how can you avoid this debacle? Well, here are 3 quick tips. Tip number 1, only trade options on high liquid stocks. Liquidity is very important when it comes to options trading. What is liquidity? Simply put, liquidity is the ease of getting into a trade and getting out. That's it. The higher the liquidity, the easier it is for you to get your orders filled. High liquidity is good. Now, the lower the liquidity, the harder it will be for you to get your order filled. Low liquidity, aka illiquidity, is bad. Stick with stocks that trade at least 200,000 shares of volume. Not sure how to find stocks that fit the bill? Well, that can easily be done by setting up your scanner and your trading platform to meet that criteria so that it filters out illiquid stocks for you. Now, we set this threshold because we need enough participants interested in the stock that we're going to trade our options on. 200,000 is a good starting point, and it's our preference here at Wall Street Jack Boys. Tip number 2, only trade options with strikes that have at least 100 open interest. The open interest is the amount of options contracts that have been open but not closed out. So these are options contracts that you could participate in. Now, once you identify your underlying stocks such as Amazon, Apple, or Netflix, then you go to the options chain and choose your strategy and find appropriate strikes for your strategy. Now, if the strike has less than 100 open interest, then skip it and find ones that do. If none of the strikes on the underlying stock has at least 100 open interest, then scratch the trade and find another setup on another stock. Now, remember, the tips that I'm sharing, I have learned the hard way, and I'm here to make sure that you avoid these mistakes at all costs. And these are the things that I wish I knew when I was just starting out. And if you find this information valuable, drop a thumbs up in the comments below. Tip number 3, stay away from options that have wide bid and ask spreads. Now, if you're new to the term bid, ask, and spread, just think of the stock market as an auction. It's a place where people that have stocks to sell are looking for buyers to buy them and vice versa. The spread is the difference between what the seller is asking for and what the buyer is willing to purchase for. For example, if I'm looking to sell my stock for $25 and you're willing to buy it from me for $23, then that would be a $2 wide spread. Ideally, we want these 2 prices to be relatively close to each other and not too far apart. The narrower the spread, the easier it will be for you to get in and out of your trade at a competitive rate and a timely manner. Now, the more volatile a stock is, the wider the bid and ask spread will be and harder for you to get in and out of your desired price. Unlike stocks, the options bid and ask spreads normally range from 1 cent to $1. If the bid and ask spread of your options exceed $1 width, then this is a sign of high volatility and is a good practice for newbies to stay away from trading options on these type of stocks. If you follow these 3 quick tips, then you have the lowest probability of getting stuck in a trade and feeling helpless like I did that one time. Now, I realize that some of you watching may be like, I have no idea what you're talking about, but don't click off. I have something just for you. Now, you've heard all the experts say that the stock market is the key to building wealth, but you don't know where to get started, or all the info you come across is straight up over your head. Well, let me introduce you to stock options the Wall Street Jack Boys way. Click the link in the description to download your free Intro to Options Trading book below. You will learn the basics of options trading and a couple of setups that you can deploy right away to make money whether the stock market is going up or down. This book will set the foundations to learning how to become a professional trader. The best part is that my down-to-earth approach will help you wrap your brain around this complicated subject in a way that the information doesn't sound like womp, 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 womp. It will surely stick. So grab your copy and start your path to becoming an options boss right now. Also, if you want to join a community of traders that has started exactly where you are today, we have a private community where I share real-time trades and stock market sensitive information to help you navigate this ever-changing stock market. Check out these videos next to see how we get down at Wall Street Jack Boys. And if you like this video, hit that like button, be sure to subscribe and share it with your friends. Peace.